Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, it is April 22nd, 2025. I'm going to consider this our first week of planting, and I know some of the guys in the South might say, hey, I've been running for some time now, but for the lion's share of the major producing states, this was the first, I'm going to say, significant planting week. So we're going to go over those numbers. Before we do that, we always want to start with the recommendations. So let me share the screen. And again, this week, we are going to say, okay, got the screen up there. Click that box, no action recommended, no action recommended. The thought process is pretty simple. We got ourselves positioned for spring growing season, and then either the calendar is going to have to tell us we didn't get a spring rally, or we're going to wait for that spring rally, which tends to be significant. Let me break that down into some numbers and just show it on a chart. But before we do that, let's look at what's going on with planting. Congratulations to Iowa. My goodness, you guys put a lot of corn and beans in the ground last week. That was the main thing that stood out to me on the report put out late yesterday afternoon. Get this up and running here, and let's look at the planting numbers. So we'll start with corn. Get a highlighter over here. Yellow, highlight, yellow. All right, so just so we're tracking together, Illinois, Indiana, Iowa, those three I states. This is what stood out to me. Okay, 7%, 2%, so far so good. 18%, my goodness. And that's up. If you look at last year, or the 2020 through 2024 average, that's 11 percentage points over it. It's 16% over last week. That's quite some field work. So congratulations to Iowa. There's some other states with good planting. Iowa's not the only one, but Iowa was definitely, both because of the size as well as just the pace, But we've got, if we want to look at double-digit growth in the planting, we've got Tennessee and Texas. We're going to see a lot of southern states here. North Carolina, not double-digit growth, but over, double-digit planting numbers. It's Missouri, and then we got Kansas and Kentucky. So the South is well underway, and Iowa is way up there as well. Let's look at soybeans.
Iowa also put a lot of beans in the ground. It's that fourth state down on the list, so 11% planted, up 10 percentage points on last week, 8 percentage points ahead of averages. If you want to just look at planting numbers, Illinois is also 10% planted, but and that's up 8 percentage points as well. So good planting there. That's the Iowa and Illinois are the number 1 and number 2, and they both are over 10% planted on the beans. I think Iowa was the big surprise. We'll jump into some analysis. We start getting some fundamental news here, weighing in a little heavier. But before we get started, it's just always important to remember kind of our philosophy of grain marketing. We build the foundation level as a portfolio, a custom plan for your farm where we say, okay, how do we market these bushels on your property? Then based on that, we look at seasonals, funds, technicals, and that kind of helps us calibrate that portfolio week in and week out. And then finally you take action, right? Pull the trigger, do what you need to do. So that's how we handle grain marketing. That's our philosophy behind it. And now we're going to jump through the corn market and soybean market. Then we'll wrap it all up with a summary. Starting with the corn market, position of funds. Get a good color here for us. I think that green would suit us well. I've drawn this a number of times where, let's get a marker. Last year they were way oversold, then they got long, and then they didn't quite get back to neutral. This dip here is the last week in March, and we've kind of seen the position of the funds either holding its ground basically or leveling up, and they expanded their ownership position. So we're not up here at those high levels that would justify selling corn because the funds are overbought. So it's not the funds are overbought, but they're long, which is friendly, which is also not surprising coming into the spring. Do you really want to place a wager that the expectation of record acreage in perfect conditions is going to hold? Probably not. You say, hey, it might be a little bit less than perfect. Let me get long in case it is. Very normal position out of the funds coming into the spring. That's the position. I'm going to scroll over here and look at the corn futures. Okay, so corn, first we're going to look at the July. And I want to point out, this is a value area. If we would go back to May of 2024, last May, this is where markets kind of plateaued as well. Just a hair over $5 is where they ran out of steam. So this is, I'm going to put it, it's a technical resistance. I'd also put it at some degree of a psychological resistance. And on this last run up, as friendly as it was and as good we ran out of steam shy of that. Now we're chopping sideways. We really have been going sideways. Since we had that nice move up, we're going sideways. Is this market going to come down? Maybe. Personally, I feel like we have this 20-day moving average, and that's probably going to offer us support as long as we have some degree of a spring ahead of us, right? Or a spring or summer concern. As long as there's production concern, I think we stay above that 20-day moving average. So I don't have a real strong bias. Is this market going to trade down here and then find some support and kind of trade up here? Maybe. Is this all we get out of the spring rally? Or is it going to look something a little bit more like this, where it just chops sideways, up and down, up and down, up and down, until you get that 20-day mover coming up here, and then we get a move up. I'm watching the calendar, and if you follow, you know that I can be pretty bullish in April and pretty bearish in June, just because as we look at seasonality from both ends, that's kind of how that looks. But in my opinion, at this point in time, mid-April, it would surprise me if we don't make another run up there to that value area, just because I think markets need to know if we get a spring or summer weather scare, is it enough for us to push through that psychological resistance level? So again, I'm not saying this market goes straight up, but we're about probably 20 to 30 cents shy of where I think this market can go, or very likely will go over the next couple months. We're going to have a hiccup. Iowa planting at a super fast pace isn't helping us at all, but it's also not really hurting us, which is encouraging. It is taking a bit of a toll on the new crop. This is new crop corn, and new crop corn is running out of steam. It's a little just new crop, both corn and beans are just a little heavier. So that's kind of that similar value area up there. We didn't even get over 5. And then here we're running out of steam already. It's coming back down. How far do we go? Don't know, but maybe we trade down to the 20-day moving average and all hope is lost. But I don't really feel like all hope will be lost. I just think it's likely we get support of that 20-day as long as we still have enough growing season ahead of us. And we're not even close to being done with the planting or the growing season. We have a lot of weeks, a lot of trading sessions. I'm not overly concerned with that. Now we will jump to soybeans. Okay, as we look at soybeans, the big news on soybeans, grab a blue marker here, was speculators flipped from sold to bought in a pretty significant way last week. So even though soybeans kind of look like they're chopping sideways, we'll look at them on a chart in just a minute, speculators have changed their opinion. They're saying beans are going down to, I better be long beans. And that's significant. Again, nowhere close to those big overbought levels that we haven't been at since like 2023. But they're long. Speculators are long on soybeans coming into the spring. They think this is moving higher, and that is significant for a pretty important, there's a pretty important technical reason why that makes that significant. So we'll start with the old crop. If we look at this this is the July soybean chart. This line that I'm drawing or extending, that's the 200-day moving average. We have not traded above in any significant way. I mean, I'm not including these little, short moves ahead. We have not sustained trade above that 200-day moving average since 2023. So we had those good prices in 2023. Then, if you remember, it started falling in December. New Year's 2024 was just a bloodbath, and then it was just a collapse. And then we got a little bit of a reprieve back up to 12.20 in May of 2024, and then it just kept falling back down. This 200-day moving average has just been weighing down on this bean market for over a year. Probably close to a year and a half by now. It's just been pressuring this bean market down. Why is it significant that speculators are long? If you follow along, you know that I was saying, hey, we might get a golden cross back here that could take the markets up and we could have friendly trade. That's what happened on corn. That did not happen on beans, and that was painful, right? That move when that golden cross failed, that was painful. Now we're in that position again. And it can fail again, right? We can have that. If we look back, though, on what was happening around the world, this was the beginning of harvest in Brazil. And then we had the trade war concerns. And if the soybeans failed, corn did not fail, soybeans did fail. Now we are in a situation where we have soybean harvest in Brazil is over. Spring planting is getting underway here in the U.S. I mean, in Brazil and Argentina. It's not quite over, but it's basically over. And we have speculators getting long. So in this week, I'll make this black. In this week here, speculators decided to buy. They're saying, I think this goes higher. So that doesn't mean it has to go. Maybe it fails again. Maybe beans make a move down. But I do think it's noteworthy that that value area that I pointed out where July beans were over $5 at that same time back in May. Where is it? Did I say corn? That value area where July corn was over $5 at that same value area back in May of 2024, beans were at around $12.20. So if you want to look at the valuation between corn and beans, if to the extent that those need to be together, that $5 plus mark on July corn in 2024, that would have given us, $12 beans. So I'm not saying we have to go there, but that's what, $1.70 rally on soybeans. Doesn't have to happen, but we've tried the bottom of this market a couple of times and haven't been able to fall out the bottom. Really kind of when it gets, down around 970, 960, and I would even say to some extent too much under $10, the bean market just kind of gets uncomfortable with falling more. What if we get a rally? Maybe it doesn't go to 12 or 12.20, but what if it goes to 11 or 11.50? Or, what if we get that move? It's not saying we will absolutely get that move, but what if we do? How do we want to be positioned? And what does that look like? And then new crop beans. New crop beans are a little bit weaker, but the pattern is basically the same. You've got this 20-day moving average coming up, the 200-day moving average coming down. If speculators choose to keep buying this, we probably break through. What happens when you get that 20-day moving average crossing up above the 200-day? That's a golden cross. That was that big move in corn that we saw where back in, was it February, late January, February, where corn just blew up and over $5. That's what happened. It was a golden cross and then speculative buying that just took us up there. Might be a bit of a flash in the pan, but how do we want to be positioned? Well, we want to be ready to pull the trigger if for some reason we might come in early to that like we did in January, February. But if we do, we just keep selling into that rally till we get our work done. And then when the dust settles and the markets fall, we'll be happy with how we're positioned. At least that's how markets tend to be positioned to work. Okay. Now let's go back and let's just summarize what's happening in the market. One final glance and we will wrap it up for the day. Okay, seasonally it is a sell on corn. Seasonally it is a sell on beans. The funds for corn are long, but not long enough to justify selling, so we're going to put neutral on that. The funds for beans flipped from short to long, but not long enough to justify selling. We're going to put neutral on that. Both corn and soybeans are in uptrends. Corn and soybean market. Soybean cash markets are firm in the USA. It will be interesting to see how they behave if we do get a strong spring rally. Cash markets in the Southern Hemisphere are surprisingly strong, which points towards strong global demand. the corn rally ran out of steam about a week ago, but we haven't really seen a sell-off yet. As long as Chicago corn can stay above the 20-day moving average, I am not overly concerned with downside risk. The soybean market is poised to once again try a golden cross. This golden cross failed earlier this year. But speculators have accumulated a small long position, and we still have the bulk of growing season uncertainty ahead of us. No guarantees we get a spring rally, but in mid-April, with planting just getting started, most of the uncertainty is ahead of us. Markets are positioned in a way that I'm not convinced we won't have a spring rally. So the way I like to think about it is, since many years we have a spring rally, and since many years the best prices of the entire year come in the spring, I want bases loaded coming into the spring. So that's kind of how we're set up, right? From a grain marketing standpoint, we've gotten some good work done. We have bases loaded. The next 10 weeks, and it might not even take 10 weeks, are possibly, or many, many years, the next 10 weeks, end of April, all of May, at least the first part of June, maybe all of June, are likely the most important to grain pricing of kind of the whole year. So this is game time, right? This is the playoffs, so to speak. We're positioned in the market, ready for a rally. If the calendar passes by and we're not getting that rally, we'll adjust accordingly. But if we get that rally, we have to be ready to execute. If we get, bases loaded and we get some good hits, we have to be able to score runs on those and get that work done. So hope you have a great rest of your week. I'm guessing at least some of you are watching this from a tractor or getting stuff ready in the shop. So I'm sure it's busy. Thank you for all that you do, putting out a crop year in and year out. If you don't raise a great crop every year, the world is a place that I don't care much to live for, because it gets real messy real quick. So just thank you. I know that a lot of times farmers are underappreciated, and I know it's a tremendous amount of work to go out and raise a good crop. So thanks for your work. Thank you for putting in your best effort to raise a good grain crop. That's good for the world, and I appreciate it. Have a great rest of your week.